Now, Sanlam's full-year normalised headline earnings per share taking up 17% to 292 cents. The rise is attributed to a 50% increase in net investment return that's earned on the capital portfolio and a strong performance in South Africa's equity and bond market. We caught up with Johan Van Zyl, the CEO of Sanlam, for more.
I think we got the basics right in our biggest businesses. Two things. We got our retail business in South Africa, mainly insurance part, to work extremely well. And then our expansion into emerging markets really delivered sterling results. And these two areas drove the bulk of it. There are other pockets that we've done well in capital markets, but that's really using this base in South Africa, and that's been created over the past 4 or 5 years in emerging markets mainly.
Absolutely, but everybody's been talking about how difficult the environment has been, and we know in South Africa it's been extremely difficult. The consumer is under pressure, and then in emerging markets as well, they have their own challenges, and yet you have been able, as one could put it, draw water from a stone. Going forward though, how much remains to be extracted from the things that you've done right in this set of numbers?
I think the basis has been laid to really, for the next few years, at least 3-4 years, to build on this and to get some of the results. I mean, we shied away from the over-indebted segments of our population here 3-4 years ago. 2 years ago, we deliberately changed tack quite hard. People didn't like that at the time and say, you know, you wrote less business here or there. But those results are now coming through. The fact that we did write less and more focus on people with ability, where the policy quality is better. And so, you know, in insurance particularly, it's not only about how much you write, but it's also on how much of the business you retain on the books. And retention is often more important than simply putting more business on. And this is what we've been focusing on, you know, looking at clients, value for people in what we produce and so forth.
I want to focus slightly on that emerging market, particularly here in South Africa. How much potential remains in that market from where you sit?
Where we sit, there's a lot to be done. Firstly, in underpenetrated segments, we can do better. There are still a lot of people who need advice, who need solutions for them, who want to save, and we're partnering with them. But secondly, we can also be more efficient. There's a lot of money to be gained from simply being more efficient, to cut out a lot of wastage in what we do, and really focusing on that. And you know, many people have said, when I've been with the business 10 years now, that, you know, the insurance market is mature, it will shrink, it's something of the past. But there's a lot to be done there, and there's a lot of scope still. And if I look at our business, certainly, in spite of having done well over the past number of years, there's I think more ahead of us than what.
You actually anticipated my next question, because I was going to ask. Sounds like Sanlam is a growth business, certainly.
Yes, this is what we've been trying to achieve, and we tried to achieve it without, you know, buying big businesses and betting the farm and so. So we made small investments that can grow. And if you look at our value of new business, you know, that's up 23%. That's really the core of the future. It tells you, and by looking where that comes from, and immediately that is more into the emerging markets, the lower end of the South African market, the emerging market space, a lot into Africa, and then this year, you know, India will come on board. We've done a deal in Malaysia that will close in the next month or so. So all these things together, I think, makes us a really growth play movie.
Yeah, we'll come to in a moment to talk about those growth plans into Asia and into other parts of Africa. Let's just talk about the regulatory environment, because you flagged this as one of the issues that you have to deal with in the coming year and in the coming years ahead. What aspects particularly concern you? And is that here in South Africa? Is that across the board?
Regulatory environment across the board is quite tough. We see changes, and since we're a long-term business, mainly long-term insurance business, we don't deal easily with changes, because we have asset liability matching. We take people's money now and we make promises on what we will deliver 30 years from now. So if the environment changes, what we deliver has to change as well, and that impacts us big time. So any regulatory change creates uncertainty for us. And uncertainty is bad for business. The moment you're uncertain, people don't invest, they wait, and so forth. This is an international phenomenon. And we've seen massive changes in Europe, in the US, in India, and in Africa. But in South Africa, what concerns us is the sheer magnitude of change. You know, every single thing that we do, we're changing the way we sell, the rules that account to agents, FICE legislation, the exams that they have to write, and things like that. We have pension fund reform. We have treating customers fairly. We have the whole SAM project looking at the capital. So every single aspect of our business is under regulatory scrutiny and is going to change. And we don't know to what. We don't dispute the fact that it's necessary.
It needs to change,
but everything together is a lot to swallow. And
what's your message? What's your message then to shareholders as well as to the regulatory authorities who are making these changes?
I think we're well set. By and large, in South Africa, we didn't fall over when the credit crunch came. Nobody went bust. You know, now to have massive changes on the capital base is, I think, wouldn't be that prudent.
Sure.
We have to follow the rest of the world. We take those things. Treating customers fairly, we've made massive changes from, I think, where the insurance industry wasn't very good and looking towards that 10, 15 years ago. But our RAs, the problems that we've seen with the pension fund adjudicator, you would remember those times.
I do.
Those things have been sorted out. Our products are much more flexible. So a lot of the stuff has been done. And now to throw the whole, we may throw the baby out with the bath.
So you're saying the authorities are not listening and seeing what you have done on the ground?
No, we're working well together. We're working well together. But the plans have not been finalized. It's all up in discussion. And some people have bigger things in mind than what is necessary, and others have smaller things.
Okay.
So this uncertain time, still we get clarity, is what really is not good for